To the last problem given in the exercise, that is problem number 22 of exercise under chapter number 6. 22. In this, what are the questions to be answered? Prepare necessary ledger accounts and the balance sheet immediately after the death of Suman. It is the question. There are three partners, Vijayan, Sudan and Suman. Out of these three partners, on 31/3/2019, the third partner, Suman, retires. So, not Suman retires, he dies. Suman died on 31/3/2019. So, in that case, how to prepare necessary ledger accounts? I told you the important ledger accounts are revaluation account, capital account and bank account. Settled to the partner who is retiring, or the amount to be settled to the executor of the died partner after the death of a partner. Only that bank account arises at that juncture, at the time. But here, there is nothing told about the settlement of the amount due to the partner who died, that is the partner Suman. So, in that case, it becomes a loan to the business. So, in this problem, the two important ledger accounts are revaluation account and capital account only. The third one, balance sheet, is a statement. Now, we shall try to prepare the revaluation account. As you know, this is the final chance under this chapter. So, listen carefully. This is a revaluation account. Since it is an account, it is a ledger. It is a ledger. And under this ledger, what we are going to post? What are the postings to be made here? That is debtor and creditor, because it is a ledger. We prepare revaluation account. Right. And what are the headings to be written under this account? Particulars, rupees, the same particulars, rupees. Okay, and this is credit side and this is debit side. What should be written on the credit side of the revaluation account? What should be written on the debit side of the revaluation account? On the debit side, on the credit side of the revaluation account, we must pass profit items. On the debit side, we must pass loss items. How do you find the profit items and loss items? If there is any increase in the asset, increase in the value of the asset and decrease in the liability, then it is a profit item. Increase in asset, decrease in liability is a profit item. In the same case, just opposite. Decrease in the value of asset, increase in the value of liability will be a loss item. So, by bearing this in mind, we should pass in this. And another question comes now. From which part of the problem we can find this profit item and loss item? And we must find those items only from the adjustments given under balance sheet of the question. What are the adjustments given there? Building is to be valued at 1 lakh. Actually, the value of the building is 80,000. Now it has been valued as 1 lakh. So there is increase. Building is an asset. Therefore, increase in the value of an asset is a profit item. So by buildings account. That is, how much there is increase? 1 lakh minus 80,000, therefore 20,000 is the increase. Right. Then, from the second adjustment, stock to be depreciated by 5,000. So you decrease the value. In the last adjustment, we should find there was how much increase. In the second adjustment, we need not calculate. The decreasing amount is consolidated, solidly given. That is 5,000. So stock to be depreciated, it is a depreciation. Therefore, it is a loss item to depreciation account. It is a 5,000. Then there are 4 adjustments. Third one is regarding the goodwill. Fourth one is regarding the profit and loss. These two, the third and the fourth will is connected. Third and fourth adjustments are connected with only capital account, not with the revaluation account. Therefore, we can stop with that and we can do the closing. And what is there? Here, the profit is 20,000. Loss is only 5,000. The excess profit should be divided among the partners. Revaluation profit. How much? 15,000. This 15,000 revaluation profit should be divided among the partners to revaluation profit transferred to who are the 3 partners given here? Vijayan, Sudan, Suman. Vijayan's capital, Vijayan's capital account, Sudan's capital account, Suman's capital account. Suman's capital account. This 15,000 should be divided. In what ratio? In what ratio it should be divided? Profit or loss should be divided in the capital ratio. See the first line of the problem. Vijayan, Sudan and Suman are partners who share profits and losses in their capital ratio. What is their capital ratio? Profit ratio is equal to, or gaining ratio is equal to capital ratio. What is their capital? It is given there in the question: 70,000, 50,000, 30,000. 70,000, 50,000, 30,000. So it is equal to 7:5:3. 7:5:3. This is their profit sharing ratio. According to this ratio only, this amount 15,000 should be divided among these three partners. So 15,000 into 7 plus 5, 12, 12 plus 3, 15, 7 by 15, 5 by 15 into 3 by 15. If you simplify these to 1,000, 7 into 1,000, 7,000, then 5 into 1,000, 5,000, 3 into 1,000, 3,000. So we should write here Vijayan's capital account. Vijayan's capital account is 7,000. Sudan's capital account 5,000. Suman's capital account 3,000. So by this method, the share revaluation profit should be divided among the three partners. Once again, I repeat how the revaluation account should be prepared. The revaluation account should be prepared in the format on the blackboard. Revaluation account, particulars, rupees, particulars, rupees. And we should pass profit items, entries for profit items on the credit side. Or we should make the postings for profit items on the credit side. For the loss items, the postings should be on the debit side. Okay? Right. And now it is our duty to find the profit item and the loss item. From where we can find the profit item. What is actually meant by profit item or loss item? Profit items or loss items can be found from the adjustments given under the balance sheet of the question paper. Question paper கீழே இருக்கக்கூடிய adjustmentல இருந்து we can find the profit items and loss items. The increase in the value of assets and decrease in the value of liability are considered as profit items. Decrease in the value of assets and increase in the value of liability are considered as loss items. And by keeping that in mind, if we go to the adjustments given under the balance sheet, the first one, building is to be valued as 1 lakh. Already in the given balance sheet it was 80,000. Now it has been valued as 1 lakh. Therefore, the increase in the value of buildings is 20,000. That we can write. Then the second adjustment, stock to be depreciated by 5,000. Depreciation in the sense decrease in the value of the asset. Stock is an asset. Decrease Since it is a decrease, we can write it on the debit side to depreciation and depreciation on buildings. Even we can write, instead of writing it depreciation here, to stock account we can write, it is better. If you write to stock account, because decrease in the value of stock, to stock account. To stock account 5,000. That we have written the last item. The third adjustment is related to goodwill, and fourth adjustment is related to profit of the firm, profit and loss of the firm. This goodwill and the profit and loss of the firm these two items are connected with the capital account. So we will consider those two at the time of preparing the capital account. With this, the items we have selected for revaluation account is over. Now we should close the revaluation account. Here total profit 20,000, loss 5,000, therefore excess profit is 15,000. And total 20,000 we can write, the greater total, balancing figure 15,000. This excess profit should be divided among the partners Vijayan, Sudan and Suman. In what ratio? The ratio is not directly given. Vijayan, Sudan and Suman are partners who share profits and losses in their capital ratio. So what is their capital ratio? So the gaining ratio will be the capital ratio. What is their capital? 70,000, 50,000, 30,000. So if you simplify, it is 7:5:3. Okay, now, and therefore in this ratio only, this profit should be divided among the three partners. 15,000 into 7 plus 5, 12, 12 plus 3, 15. 7 by 15, 5 by 15, 3 by 15. Simplify this. 1,000, 7 into 1,000, 5 into 1,000, 3 into 1,000. That amount should be written there. With this, the revaluation account is over. We will continue pause. Before start doing the capital account, we should keep some items, some information ready so that we can successfully do the capital account. And what are those things which should be kept ready? Number one, the gaining ratio or the profit and loss ratio by which any amount should be divided among the partners. That is one. Then share of goodwill and share of profit and loss. All these things we should keep ready first. After keeping them ready, we shall pass on to the capital account. First one, the profit sharing ratio or gaining ratio. Gaining ratio or profit and loss sharing ratio is equal to capital ratio. It is given in the book itself. What is their capital ratio? Vijayan 70,000, Sudan 50,000 and Suman 30,000. So this is equal to 7:5:3. This is the ratio. Almost in all the problems, this ratio is given directly. But here they have given a hint. They divide their profit and losses in their capital ratio. What is their capital ratio? This is their capital ratio. This is first part. This is over. Second one, see, goodwill of the firm is valued at 36,000. How this 36,000 is divided? Goodwill is equal to 36,000. Goodwill equal to 36,000. And it should be divided in this ratio, 7:5:3. Under this, listen carefully, under this, what is Suman's ratio? Because Suman only died. Indirectly, he is retiring from the partnership. So he died, therefore, he should be considered as a retiring partner. So his share is 3. So how much it is? 7 plus 5, 12. 12 plus 3, 15. Therefore, out of this 15, 3 by 15 is Suman's share. Suman's share is equal to 36,000 into 3 by 15. Yes, we cannot stop with that. Had he died at the end of the year, it's okay, we can stop with that. But he did not die at the end of the year. In 3 months itself he died. He died on 31/3/19. The balance sheet was given up to 18 December 31/12, but he died on 31/3/2019. That is, he was in the partnership only for 3 months. Therefore, we should put 3 by 12 also here. For 3 months, 3 by 12. 6 months, 6 by 12. 9 months, 9 by 12. If it is for 1 year, 12 by 12, we can put 1 for that. For 12 by 12, we can put there 1. Now we can simplify. What is this amount? 5. This is 4. 4 3s are 12, 5. With this 5, we can simplify. What is this? 7 5s are 35. Remainder 1, 2, 20. 4 5s are 20. 10. 7 5s are 35. Remainder 1, 10. 2 5s are 10. 7,200. 7,200. 5. And again, if you simplify by 4, and for this we need not write this 3 months only for profit sharing. So it is 7,200 years share, because it was of the past year's goodwill, and therefore we need not calculate for current year. Current year we cannot calculate. It is 7,200. And this 7,200 must be divided among the other 2 partners. This is Suman's share of goodwill. From this 7,200 must be divided among the continuing partners. So, who are the other partners? Vijayans. Vijayans gain, Sudan's gain. Vijayans gain and Sudan's gain. You should follow it very carefully. This is 7,200. From this 7,200, how much Vijayan gets and how much Sudan gets? Vijayan's gain, how much it will be? When the third partner Suman retires or dies, the other 2 partners will divide or continue with the ratio 7:5. We should consider this 7:5. So for him, 7 by 12, and for him, 5 by 12. You should follow carefully. Then this is 6 12s are 72. 7 into 6, 42, 4,200. The same 5 into 6, 3,000. We should look at. And again, this is one of the items that we have considered, the third one. Then what about the fourth one? What about the fourth one? The fourth adjustment is regarding the profits. What is the profit for 2016, 17, 18? Year profits. 2016, 40,000. 2017, 50,000. 2018, 30,000. 30,000. 16, 17, 18, 40, 50, 30. So what is the total profit? 1,20,000. What should be the average profit? Average profit is 1,20,000 by 3, that will be equal to 40,000. This is the profit during the year. From this 40,000, the partner, that is the partner who died, should share some amount. What is profit share of Suman, who died? From this 40,000, what is his share? The share profit ratio is 7:5:3. Just now I said 7:5:3. Total it is 15. So the Suman's share will be 3/15, as we did here, 3/15. Here only we should consider the existence of the partner who died. For how long he was in the partnership? He was in the partnership only for 3 months, therefore 3/12. This is equal to this, you can simplify for this, you can simplify for, and this, if you simplify, this is 10,000. This is the amount given correctly. Five times. This is 5 times. 5 3s are 50. Then if you simplify this 10,000, and if you simplify further this, you will get 10,000 by 5, 2,000 rupees. This is the profit share of Suman. So we should keep ready all these things before entering into the capital accounts. And for that, what are prepared here and why should be prepared? I shall explain once again, since this is the last opportunity under this chapter. Listen very carefully. 1. Whatever the amount here to be divided among the partners, we need some ratio, that is a profit sharing ratio. And here there is a hint given. Vijayan, Sudan, Suman are partners who share profits and losses in their capital ratio. In their capital ratio, they divide. What is their capital ratio? That is the gaining ratio or profit and loss sharing ratio. Capital ratio 70,000, 50,000, 30,000. This is given in the balance sheet. Simplify 7:5:3. Therefore, here afterwards, whatever the amount to be divided among the partners, we should use only this ratio. Okay, the ratio is ready. Now come to the point of goodwill. What is the total value of goodwill during the year? Goodwill during the year is 36,000. What is the amount of goodwill due to the partner who died? That is, his share is 3 times 7 plus 5, 12, 12 plus 3, 15. 3 by 15 share is for the partner who died, that is Suman's share. 36,000 into 3 by 15, it is 7,200. So, this is goodwill share. This goodwill share of the partner who died is shared among the continuing partners. For the continuing partners, what is the ratio? For the continuing partner, this partner died already, therefore, the ratio which will continue in the partnership will be 7:5. So, for Vijayan 7 by 12, 7 plus 5, 12, and for Sudan 5 by 12. So, this is 7,200 should be divided among the partners in the ratio 7:5 because the third partner has already died. So, we should take the remaining numbers for the continuing partners, remaining ratio. That it is 4,200, 3,000. And with this, the goodwill is okay. Now, adjustment number 4. What is given in 4? Share of profit from the closing of the last financial year to the date of death of the partner. Last financial year, how it should be calculated on the basis of average of the 3 completed years profit before death. அவருடைய டெத்துக்கு முன்னால 3 வருஷம் இருக்குல்ல அதனுடைய ஆவரேஜ் ப்ராஃபிட். ஸோ he died in 31/3/2019. Therefore, before 19, what are the 3 years? 16, 17, 18, and for those years only, the profits are given 40,000, 50,000, 30,000. So, you add total profit 1,20,000, average profit 40,000. This is what they have given. Average of the 3 completed years profit, and that should be the profit at the time of death of the partner Suman. And this 40,000, from this 40,000, what should be the share of Suman? What should be the share of Suman? And actually, from this 40,000, what is the share of Suman? 3/15. So, if you simplify this, you will get 8,000 here. 8,000 here. But what happens? He did not continue throughout the year. He was in the partnership only for 3 months. Only for 3 months he was in the partnership. Partnership the period of 3 months now. Because in March 31st itself, on March 31st itself, he died. So, he was in the partnership for 3 months only. Therefore, 3/12. This is very important. If you don't write it here, if you use 3/15 only, you will get 8,000. It will not be okay. So, only for 1/4 years. So, 5 times, this is 4 times. You simplify this by 4, 10, 10,000 by 5, 2,000. This is the profit share of the Suman who died during the year 2019. The next important ledger is the capital account. What is the format for the capital account? I said already. We have done so many times the capital account. Particulars, columns for 3 partners. Vijayan, Sudan, Suman. And the same thing, particulars, Vijayan, Sudan, Suman. It is also a ledger called the capital account. Debtor and the creditor. Particulars, Vijayan, Sudan, Suman. Particulars, Vijayan, Sudan, Suman. Suman. This is the capital account format. In this, I told you very many times, what should be the first entry? The first entry should be for the amount invested by the partners, that is the capitals, that is the capitals of the partners. How it should be represented? By balance brought down. Vijayan's capital 70,000, Sudan's capital 50,000, Suman's capital 30,000. Right, this is the first entry. As I said, this is the last chance. This is the last chance, and you should remember what are the items to be considered for this capital account. Regarding the revaluation, profit or loss, then general reserve, then reserve fund, then goodwill, then profit and loss, then workmen's compensation. These are all the 6 items which may be considered for this capital account. But we should see, or we should go through the problems. Out of these 6, how many are appearing in this? The first one, revaluation, we have found out already, and it is a profit. So by revaluation account, it is a profit. If it is a loss, we will write it on the debit side. So by revaluation account, what is the amount? 7,000, 5,000 and 3,000. This is the share. You can go through the revaluation account, what we have done already. So this is over. Then general reserve or reserve fund, anything given in this problem? Yes, general reserve is given 18,000. That should be divided among the partners by general reserve. What is the amount of general reserve? General reserve is 18,000. So this 18,000 should be divided in the ratio 7:5:3. So 12 plus 3, 15. 7 by 15. 5 by 15. 3 by 15. You simplify and write. So what it would be? 115. Remainder 3, 30, 2 15s. So 1200. So 7 into 1200, 8400. 5 into 1200, 6000. 3 into 1200, 3600. So this is the share of general reserve, 8400 and 6000, and for Suman it is 3600. So after doing this general reserve, okay, it is appearing. Then the next item is what? The next item is share goodwill of the firm is valued at 36,000, and in the ratio 36,000 we have calculated all those things, that Suman's share is 7,200, and that 7,200 is divided among the continuing partners. What is that? And continuing partners share by, who are the continuing partners? Vijayans, by Vijayans capital account. By Vijayans capital account. How much amount? 4,200. By Sudan's capital account. By Sudan's capital account. 3,000. So Suman's share of goodwill 7,200 already we have calculated, and that amount is divided in the ratio 7:5, that is 7 by 12, 5 by 12. Therefore, the amount 7,200 is divided as 4,200 and 3,000. Okay, this is Suman's share is divided by these two partners. And the fourth adjustment is profit is divided, and how much share is gained by Suman, that is by profit and loss suspense account or appropriation account. Suspense account. This is only to Suman. What is the amount? That is 2,000 rupees. We have calculated already. The profit share we have calculated already. It is 2,000. This is the profit share. And how we should write under the heading by profit and loss suspense account we should write. Then here this Suman's amount is divided among these two partners, whereas the same thing should be repeated on the debit side. How? Who is the partner divided by Suman's capital account? To Vijayan it is 4,200 and Sudan it is 3,000. So by Suman's capital account we should write. There continuing partner and the partner who dies, the amount is in the partner who died. Here, the account in the partner's name, that is who died, but the amount will be in the continuing partners. Okay. Now, I hope this profit and loss also we have attended, goodwill we have attended. And all these things, this is for goodwill and this is for profit and loss share. And therefore, the 4 items available in the problem have been attended to. Now we can close the capital account. We can close the capital account. Find the total of this 85,400. 61,000. 45,800. 45,800. Here the amounts are very less, therefore we should write the same total. 85,400, 61,000, 45,800, 45,800, 85,400, 61,000, 45,800. And I said this amount should be, usually we write in the name of by balance carried down. And 4,200 you minus, then what happens? 81,200. And from 61,300 you minus 58,000. And here there is no amount, we can write 45,800. 81,200, 58,000 and 45,800. Okay. And in this we have done a mistake. What it is? The carried down amount is, it is coming under capital. This is the capital in the name of Vijayan's name 81,200. In Sudan's name 58,000. This is the position of the capital in the business. But Suman's share is 45,800. But he is no more. He has already died. This amount, how this can be shown in this balance carried down? So this amount should not be shown here. It should be shown separately, 45,800. And if the partner retires, we can write by Suman's loan account, because the settlement is not mentioned here. Whether the partner dies or retiring, whatever it is, if the account is settled, we can write by bank account in the particular account. But here nothing is mentioned regarding the settlement. So it is presumed that the amount due to the partner who died is considered as the loan given to the partnership. So partnership கொடுத்த கடனா எடுத்துக்கணும். Okay, so in that case, who is the retiring partner? Suman. By Suman's executor account. Executor's account. Suman executor's account. This is what we should write. The retiring partners, executor, if there is any executor, we should mention that executor's account. So here the Suman is the retiring partner. So in that case, we should mention separately the partner who died share should be there separately. Okay, how we should prepare the capital account? Once again, capital account you write, this is the format, you know, particulars and separate columns for each partner, the same thing on the credit side also. Since it is a ledger account, which it is a ledger, debtor and creditor must be there. Okay, after that, what should be the first entry? The first entry should be for the capital of the partners. What is the capital of the partners? 70,000, 50,000, 30,000 for Vijay and Suman. It should be represented by balance brought down. That's the calculator. Then, what are the other items to be considered for capital account? These are the 6 items to be considered for capital account. Number 1, revaluation account. If there is any revaluation profit, we will write on the credit side. If there is any revaluation loss, we will write it on the debit side. So, it is a profit. So, by revaluation account, this we have already shown in revaluation account. Okay, then general reserve. The general reserve is given as 18,000 in the given problem. So, that 80,000 should be divided in the capital ratio. 7 by 15, 5 by 15, 3 by 15. If you simplify and write 8,400, 6,000, 3,600, what I have written. So, these two over. Then, next one, goodwill. What about goodwill? Goodwill we have calculated, and the share of the partner who died is 7,200. The goodwill is. That 7,200 is gained by the continuing partners. How? In the ratio 7:5. That is 7 by 12, 5 by 12. If that amount is 7,200 is divided, we will get 4,200, 3,000. So, the gaining partner's name in the particulars column and the amount in the partner who died. The same entry should be taken there on the debit side. How? The amount will be in the continuing partners and the account will be on the partner who died. Here, account continuing partners, amount the partner who died. Here, the account the partner who died and the amount will be in the continuing partner's account. This is important. You compare these two and write. Then the fourth point in the book is regarding the profit. What is the profit? We have already calculated. I have shown you separately the total profit, average profit, and out of those average profit, what should be the retiring partner Suman's share? That is 40,000, that average profit, out of which 3 by 15 is Suman's share. That is for 1 year. But he was alive in the partnership only for 3 months. Therefore, 40,000 into 3 by 15 into 3 by 12. If you simplify, you will get 2,000 rupees. So, that's by profit and loss suspense account 2,000 we have written. And we have passed the entries already on this on credit and debit. Now you can find this side the total 45,800. Sudan 61,000, Vijay and 85,400. The same total you can write here also because the amount here is very, very bigger. So you write it and we must find the balancing figure now. Then 85,400 minus 4,200, 81,200. 61,000 minus 3,000, 58,000. And this 45,800 you can write. But we cannot write all the 3 partners' capital as balance carried out because Suman has already died. The amount due to him should be handed over to his executor. the person who was appointed by him, if anything happened to him, he has appointed someone, that person is called executor, and that executor to the executor, that amount should be paid. If the amount has been paid to the executor, we can write by bank account this 45,800. But regarding that, nothing is given as instruction. So it is treated as that amount is given to the business as loan. Therefore, by Suman's executor account, 45,800 it is written. Now the capital account is prepared. Okay, pause. Okay, the next part of the problem to be answered is the balance sheets. Balance sheet. Balance sheet format, you know. You have seen already in 11th standard, and also in the last 2 or 3 chapters we have seen the balance sheet. Balance sheet after death or as on, this is the date of partner's death, 31/3/2019. Here, liabilities, rupees, and assets, rupees. This is the format. How to prepare the balance sheet? You strictly follow the question. You select the items one by one. That is, the first item is building. First item is building. Building's current value is given straight away in the book as 1 lakh. Now it is valued as 1 lakh, right? 1 lakh. Then next one, stock. Stock, it is given, the value of stock is 45,000. But in the adjustment what is given, 5,000 should be depreciated. So less depreciation. $5,000. So 40,000. Then the third item, debtors, no adjustment given. Debtors, the amount of debtors 25,000. Then next one, cash at bank. In this also no adjustment, 20,000. Then next adjustment, cash in hand. Cash in hand, 15,000. Then go to the liability side. Capital account. Who are the 2 continuing partners? Vijayan, then Sudan. Sudan. Vijayan's share of capital is 81,200 and Sudan's share of capital is 58,000. You add these two and write. 1,39,200. Next item, general reserve, has been attended to by the capital account calculation. So already gone to capital account. The next item is creditors. And before that, the partner who died, Suman's executor account. Suman's executor account is 45,800. Then the last item is creditors. Creditors, that is 17,000. 17,000. And then we shall see the adjustments now. The items from the balance sheet given is attended to now. Now see the adjustment. Building, stock, these two have gone to revaluation, that is treated in the capital account. Then goodwill also has been calculated and treated in the capital account. And the last one, share of profits, that is 2,000 rupees we have calculated, and that profit share should be shown here, profit and loss. Suspense account. This is 2,000. Now we can proceed. We have attended now, so we can close. Here then here 2 1 0 1 plus 1 2 lakhs 2,000. Now we have got the equal total, so we can assume that we have completed this sum successfully. Once again, how we have prepared this balance sheet. The preparation of balance sheet is very simple. It is easier also when it is compared to other part of the problem. So you write the balance sheet after death or as on what day he died, you write it. Then you see the problem and attend one by one. First one, building 80,000. Now it has been valued as 1 lakh, given under adjustment number 1, therefore this. Then stock 45,000. Here there is a depreciation given under adjustment 2, 5,000, therefore 40,000. Third item, debtors, no change. Fourth item, cash at bank 20,000, no change. Fifth item, cash in hand 15,000, no change. We have written. This asset side is over. Then go to the liability side. The first item is capital. That is capital account of continuing partners. This we have decided as balance carried down and the balance brought down. We can write this is carried down 81,200 and Sudan 58,000. Right, and show it as a total. Then the partner who died's amount That is, Suman is the partner who died. Since he died, Suman's executor account is to share amount 45,800. And the capitals over. General reserve already we have brought to capital account. And the last one is creditors. It is 17,000 we have done. Now, before closing the balance sheet, we should check the adjustments given. What are those adjustments? Number 1, building attended. Number 2, stock attended. Number 3, goodwill already has been taken to capital account. Number 4, share of profits of the death of the partners. That is, profit share, profit and loss suspense account. This is 2,000 rupees. This we have attended all. Now, if we find the total, it comes to 2 lakhs 2,000 on both the sides. And plus. Regarding this chapter, what we have done? We have assessed the assets and the liabilities. We have revalued. For that, what we did? We passed the entries for revaluation. One for profit item, other one for loss items, third one for total profit or loss, excess profit or loss. These are the 3 journal entries. Then revaluation account. All the profit items on the credit, loss item on the debit. This is the method what we have followed. And after that, we have found out here new profit ratio and gaining ratio. In the retirement, we found new profit ratio and the sacrificing ratio, because when a new partner is admitted, the continuing partner or the existing partner should give something to the new partner. So they are sacrificing ratio. But in this chapter, a partner is retiring, he is leaving the partnership, or sometimes he dies. Then the partners, the particular partners' share will be taken by the continuing partners, and therefore it is a gain to them. So in this chapter we have found out new profit ratio and the gaining ratio, and for that we have prepared some, we have done some problems also, and mostly in these problems what we have prepared, the 3 important ledger accounts, 1 revaluation account, 2 capital account, 3 balance sheets. In this revaluation account and the capital accounts are ledger accounts, so we put debtor and the creditor on the left hand side and the right hand side, whereas the balance sheet is a statement, we don't write those things, we write simply the heading. Okay, with this we complete the chapter, and we shall pass on to the next chapter in the next class. And before that, what you must do? Almost I have completed everything from the exercise. But what is your duty? Assignment. Complete all the problems given as examples and illustrations. Given as examples and illustrations. Given as illustrations. Given as illustrations. All the problems. Bear it in mind. I will check your notebook on Wednesday. I will check your notebook on Wednesday. Thank you all.